Are you desperately trying to figure out how to support an aging family member while taking care of your own kids and managing work responsibilities? This show helps adult children to support aging parents by combining care skills, legal tools, and financial strategy into one show to save your sanity. You are desperately trying to arrange for care for your loved one who has dementia, and you're holding a long-term care insurance policy, but it is a complicated document. How do you decipher it? How do you make a successful claim? This show helps family caregivers navigate dementia care and overcome legal and financial challenges so that they can have confidence in the support and care they are providing to their loved one. Keep listening, and you will hear first how a long term care insurance policy is a legal contract. Every word matters. So you need to know what you're looking at to see what is covered and what is not covered. Second, you need to show how your family member has care needs that even make them eligible for the insurance money to pay for care. And finally, the care provider that you chose also has to be eligible for the insurance company to be making payments. And so you'll hear generally guidelines for that. And so that you can get the claim approved and the insurance money flowing to pay for your loved one's care. Joining me from North Carolina to discuss these issues is a national leader in long term care insurance planning, as well as someone who teaches other people the art and science of making a successful long term care insurance claim. His name is Bill Comfort. Bill, thanks for joining me and for sharing your insights that I'm sure will help a lot of struggling family caregivers out there.
Yeah, Patrick, thanks for having me with you today.
Bill, I don't know if you've seen this before, but here's the problem as I see it, and it's a level of frustration that regular people have out there all the time. The spouse or the adult child picks up this long term care insurance policy, and it's a lot of paper with a lot of words on it. They just need the care for their family member to be paid for. They know that their family member paid a lot of money in premiums for this policy, but it's not, no one really knows what it says. Even if the policy holder who got the policy understood what it says, that person is now sick, they're injured, they have dementia, all of the above, so they can't explain it. So what happens is the family fires off a claim, it gets denied, and then the family is enraged. They're blaming the insurance company for being greedy, for leaving regular people hanging, and they're just at their wits' end. Has this been, in your experience, something you've seen?
Yeah, absolutely. And I think part of what is going on in that description that you just laid out there is it's an incredibly emotional time. Your loved one is suffering, needs care. It's often creating life and lifestyle burdens on other family members, spouse, adult kids, and everybody's exhausted. And like you said, they just want to get care and they just want this insurance to work. Those frustrations, the hurdles and so on are to overcome, even if they're built into the process sort of normally, often feel burdensome. And so just one of the things that I run into all the time is it's really often a matter of translation. Unfortunately, consumers don't speak insurance. They don't know the terms, the technical terms, the legal terms, and unfortunately, insurance companies don't do a good job speaking consumer.
Sure.
They're just reading off of whatever their process is on their side without really coaching what's the best practice to solve the problem or take the next step. I will say this insurance works. I've sold long-term care insurance for more than 30 years. I've had my own clients and have consulted with other families on claims for, gosh, probably at least 25 years, maybe more. And most of the time, it works the way it's supposed to, but it's insurance. There's that hassle and delay and timing of getting all the right information in the right way. and doing it, as I said, in a system where the terms aren't readily understood or helpful for families that are in
I
crisis.
think you're hitting the nail on the head. It's already a stressful situation. Then you add in money and the need to pay for care. And then you have the family feeling insulted because, after all, mom paid a lot of money for this policy. It should just be a press a button and the money flows. But then you add in all of the complicated terms. And I'm thinking, as you describe that, of someone I know who is an attorney for an insurance company. And half of his job, I'm convinced, is telling the young kids in the marketing department, you can't communicate insurance that way because that's not even how insurance works. When they want to
Right.
clever, but then the same lawyers are guiding what words can be used, and it's not how consumers understand this potential lifeline for their family. So there's a lot going into it, and then on top of that, the insurance company has lawyers, but the people at home don't have a professional who's guiding them through a legal contract, and they have to then upload documents into a portal, and some older adults aren't able to do that. So there's a lot of reasons why people are already frustrated, but then you find out that maybe the insurance company was right if the family did not build a case appropriately. So I'd like to go through some of at least the big ideas,
Sure. Yeah.
knowing that every policy out there could be different. There really is a lot of variety. So we can't say for every policy how it's going to work without seeing them all. But let's give some big guidance and maybe start with just looking at what year was this policy issued? Why would that be important?
Yeah. Long-term care insurance, compared to most other types of insurance, is fairly new. The comprehensive quality contracts that we're used to today, either for people who are buying new coverage today or that have been bought and sold in the last, let's say, 30 years. They're constantly improving and it's better than it used to be. But I think the first thing to look at, and these are broad eras, if it was before, if the policy was issued before 1990, 1993, the date of issue or the effective date, you have to look very carefully because there were no clear and consistent state regulations about how policies were written. And there were a lot of problematic provisions before the early 1990s. That was a long time ago. We're not seeing many of those people. Most of the people who were buying were in their 60s, mid 60s, back in the 1980s, early 1990s, and they're passing away. But those old policies did not have to get reformed when the regulators started saying, here's what long-term care insurance can and cannot include. So that's why we've got to be careful. Most of the policies coming to claim today were issued 20 to 30 years ago. So in the years, let's just say early 1990s to about 2000. And in that period of time, we had more consistency, but there's a wide range of the way that eligibility is defined, and particularly home care and assisted living providers are defined. So if the policy was issued, let's just say 1990 to 2000, that's where it really, you've got to be very careful because there was a wide variety of definitions. From 2000 to today, where policies not only have state requirements, but federal tax code requirements that they meet. There's a lot more consistency, I think simplicity, which is relative to policies issued since about 2000. So, the way one policy works is very similar to another after 2000. So those eras are important to look at just as an initial idea.
And I like how you're weaving in two concepts that are related to the date when the policy was issued. So if your parent, maybe now with physical frailty, cognitive impairment, purchased a policy during one of those timeframes, you're starting to get a sense of how there could be differences just based on the date of issue. And part of it, as you've said, Bill, is the law catches up with industries. At first, we don't know there's a problem. Once the problem is detected, maybe there's a change in insurance regulations, there's a change in tax law, but that's only going forward from that date. Any contract issued before that stands. the way it is. And part of the deal too is, I think you kind of alluded to this, they might not have known about home care when some of those really older policies were issued. It might have just been the nursing home or nothing. So that's all that's covered. And that's all that will ever be covered by that contract. So understanding
And
general timeframes can be really important.
and that's a great example. This sort of, I call it kind of the middle years from 1990 to 2000. It was very common during that time frame that the base policy was either nursing home only or more commonly facility only. So nursing homes, assisted living, memory care. And if you wanted home care, you had to check a box. You had to add the home care rider, which also added an extra cost to it. And I see a lot of families who they look at the policy and it doesn't cover home care. And they're mad because the insurance company's not covering home care. Well, that was, if it was bought in the 1990s, that was a choice the policyholder made to not include that. And it's just, it breaks your heart. That's the kind of care that they want, and the policy doesn't provide it, but that was an option. Since 2000, for the most part, give or take, but since 2000, nearly every policy issued is what we would call comprehensive. So it covers home care, assisted memory, skilled nursing built into the contract. But it's just a good example of where the eras maybe created some issues.
So, based on the information so far, somebody out there is listening to this and they see what the date of issue was. So now their antennae are up a little bit and they know they're on the lookout for some differences. One of the first things it seems to me that they should be looking for is, what do they have to show about their loved one's need for care? In other words, when are they even eligible, benefit eligible, as we say in the industry, for this insurance company to be paying for the care? So talk to me about that. And it could be physical immobility, physical frailty, or it could be cognitive impairment, or maybe both. But given those
Right.
potentials, what are people looking for?
Yeah, so a really important concept. Nothing happens with long-term care insurance. Nothing happens until you're benefit eligible. It's like having a fine Swiss watch. It keeps immaculate time, but not until you wind it, right? So nothing happens in long-term care insurance until you're benefit eligible. And I think a good way, a good analogy to think about this is it is essentially a definition of disability or a degree of impairment that makes you eligible for the policy to start working and paying benefits. And you mentioned the two most common tracks, either needing physical assistance, and people have heard the term activities of daily living or ADLs. That's a measure of physical activities. Or, and this is a separate measure, what's called a cognitive impairment, a mental limitation. We think of Alzheimer's or dementia, but it could be a head injury or a stroke that impacts cognition.
And right there, let me
And
just insert that back to your first point about the timing of the issue of the policy. Believe it or not, listeners, there was a time when there was an Alzheimer's exclusion. We're not paying for that. Or maybe they'll pay for care, but you have to show the physical limitations. Well, we now know, especially as time goes on, far more people are getting stricken with early onset dementia in their 50s or 60s, and they're really able bodied. They can get out of bed just fine. The activities of daily living, getting to the bathroom, feeding yourself, transferring from one place to the other, no problem. But at a certain point in the history of this insurance industry, they had to prove that was impaired before they would get the care for the cognitive impairment. In more recent
right,
policies, that's not the case. But the point is, there are
yeah.
separate ways of meeting the contract definition of what those impairments are.
And another kind of general thing to think about, and this is for families that are seeing a loved one maybe decline, needing some care, asking themselves, should we start the insurance, or when does this insurance start that mom or dad paid for? Long-term care and long-term care insurance benefits typically are able to start well before someone's just flat on their back, unable to do anything. So like you said, early onset or an early stage of dementia, the person may be able to do all the physical activities, but they're not safe being left alone because of awareness, reasoning, judgment, safety issues, for example. Maybe it's a wandering risk, or they're overtaking medications because they've forgotten they've taken it, or they're leaving a pot on the stove, for example. They just can't be left alone. That itself is enough to start a claim in most cases. So it's supervision for a cognitive impairment, or help, assistance with the physical ADLs. These are things like bathing, dressing, transferring in and out of a chair or a bed, for example. Just like with a cognitive impairment, you simply need to have somebody who's supervising you for your safety with the physical help. Not all, but most policies say if somebody merely needs to be standing by to make sure you're safe, that's enough to consider that ADL to be lost or to need help with it. So if it's balance or fall risk, frailties, and somebody simply should not be and able to bathe and dress, for example, unless somebody's right there just in case, that's when a claim can start. The phrase I've used for years is, you don't have to be flat on your back in bed, unable to do anything. And, think about it. When do families worry? Wh- when does a spouse worry about going to the grocery store for an hour? Their husband or wife has had a couple of falls, and if I'm not around to remind them to take their cane or their walker or whatever, I'm terrified to leave the house. So the impact of even these standby supervisory needs for care, that's what it impacts families. And that's when most policies can also start to pay benefits. These are things we want to look at. There's some that are a little more restrictive, like it has to be hands-on assistance, but that's actually not as common as people think.
Right. I think that's a great point to make. And of course, all of this is being defined in the words of the policy and will be strictly enforced. So you got to know, what do I have to show here? How many of the activities of daily living have to be lost? What kind of supervision and what do I have to show for cognitive impairment? And then this is, Bill, I think where that's the science, understanding what the words say, but telling the story and making sure that when the insurance company goes and gets medical records, that it's going to be a pretty comprehensive record. Probably the primary care physician that's going to have care notes in the medical record about this wandering, the need to use the cane, the fall risk. And if you don't think it's in there, make an appointment with the primary care doctor and have them write that into the notes, because the insurance company will ask for it. So you're building your case. You're showing that the
Right.
ELs are lost, or that there's a need for supervision for someone with cognitive impairment.
Yeah, and that's a great point. Don't assume, if you have, for example, a parent, an older parent, or a spouse who's always gone to their primary doctor by themselves, they might not be telling them about the falls and the balance issues, or the fears that they have of slipping and falling, getting in and out of the shower. That might not be expressed to the primary physician on their own.
Right, and it's not
So,
hiding, and
yeah,
it's really, that's human nature. I think we all
yes,
overestimate our self-functioning, our independence, and it just might not naturally a fault. It might be felt as a fault, or perceived as I'm admitting to a flaw, but so people just aren't naturally telling everything they need to tell in order to get money flowing to pay for their care.
right. But this idea of setting an appointment, going with a parent, going with a spouse, and simply asking the physician, we would like you to record our safety concerns, whether it's physical or cognitive issues. We'd like to make sure this is recorded in our records because we're probably going to have to file a claim, and they're going to want to see that you're aware of this. And physicians aren't going to lie, they're not going to fudge, but they do want to record what's happening in your life. And it's not natural to them because they're fix it people and they don't see you in your home. They see you in their office. So yeah, you're I love your idea of building the case, building the story. And for people who are maybe listening to our conversation, if you're just starting the claims process or considering getting it started, do these things before you first call the insurance company. Lay out the facts, lay out the groundwork first. That'll go a long way to making it much more efficient.
That's absolutely the order to go in. Get your ducks in a row, have all your evidence, and then start the process. And we've been talking about the loved one having care needs and meeting contract definitions. What about the chosen care provider? What has to be showed there?
Yeah, and this is usually the biggest problem was with home care. So if it's a facility, whether it's assisted living or skilled nursing, those are licensed by the state. It's pretty clear what the licensure is. They typically always line up with the definitions in the policies. It's a little more clear cut. Home care providers, there could be a wider range, particularly for policies issued back in the 1990s, up until about 2000. Some policies said it has to be a licensed agency. And in some states, the states don't license what we call private duty or custodial care home care
The
agencies. And
non-medical
I've seen
folks who just
cases.
help you get through your
Yeah,
day. They're not nurses, they're not that's might be home health, that's different. We're talking about the caregivers, the people who get you through your day.
right, right. Now, that's interesting because most policies use the term home health care, but they then define it in a way, in most cases, that's going to cover these private duty helping services, bathing, dressing, supervisory help, just from an aide, not skilled care, in other words. So the definition of the home care provider, which is in the policy, is really important. Most policies, you have to use at least some sort of organized professional agency. Very few policies let you hire just an individual on your own, and then the insurance will pay for them.
Right, so
It's not allowed by most
yeah,
insurers.
so that
A
might be
few do,
a friend from
right?
church or the book group or a family member. So the person listening is waiting for the insurance money to come to them. The family member, I can imagine, and correct me if I'm wrong, Bill, there's a small percentage of long-term care insurance policies out there that are so-called cash benefit policies or something where they're just going to give you cash, use it however you want. But most of them are reimbursing bills from an
Right.
approved provider, and that has to be a professional.
There are some policies that will let you hire an independent person that meets certain criteria and that the company just agrees is providing appropriate care, right? If it's help bathing, dressing, and so on. But that's going to be in the contract. And even those policies will say, but it can't be a family member. So yeah,
So
it has
so
to
you have a
be
professional
a
and it has to meet the definition. And as you said, if it's some sort of care community or facility, whether it's skilled nursing or whether it's assisted living, they almost certainly meet the definition. But this might require a conversation with a home care private duty provider about their experience with long-term care. To are they licensed in your state? Are they do they meet the definition? But it probably, for most policies, will not include the family member or someone you go on care.com and just find a
right.
freelancer.
Yeah, great point. That freelancer is not going to be covered by most policies.
And finally, when we figure out, is our loved one, when was the policy issued? Is our loved one meeting the definitions of lost abilities, physical, cognitive? So are they eligible for the policy benefits? Then is the care provider covered? Well, finally, we're looking at okay, we're ready to roll. We have our evidence lined up to show all of these points, but there's something called the elimination period, meaning it's like a deductible on any other kind of insurance. There's a period of paying out of pocket before the benefits from the insurance company start reimbursing for the cost of care. Talk to me about the elimination period. What do people need to know about getting it started and how it runs?
Yeah, it's interesting. When it comes to claims, the number one complaint that comes to departments of insurance about long-term care insurance claims is related to this elimination period. It's not understood. What do you mean we have to wait 90 days? Well, that was the deductible, as you said, that they chose when they bought it. It could be as short as 30 days. Some policies have 0 days. 90 days is probably the most common. Could be as long as maybe 6 months. Here's the thing. Again, this is a home care problem or complication. Probably the most common type of elimination period, an unfortunate term, is what's called service days. So if it's 90 days, a family might look at it and go, well, we have to wait 3 months. Well, you have to dig into the policy. If it's 90 service days, they will only give you count a day if you actually got a service that you paid for that otherwise would have been covered.
So if
So if you want
professional
90 days
caregiver
and three
yeah,
months,
professional caregiver
you got to have a
somebody
home care aide every day.
right,
Yeah.
right, and the family, of course, is saying, "Well, we don't need the professionals every day, we need them 3 times a week." Well, at that rate, it's gonna take a lot longer than 90 days to satisfy 90 days because it's you're only counting 3 days a week.
Or a family that I worked with, I didn't sell them the policy, but I was brought in to consult at the claim. The three adult kids, mom had dementia. Mom wasn't able to participate. She was clearly eligible. And the kids saw the 90 days, the adult kids, and the three kids took turns for 90 days taking care of mom. And then they wondered why they weren't getting benefits. And it was service days. None of those 90 days that those adult kids provided care counted. And so they then had to bring home care aides in 7 days a week for the next 3 months to fill that deductible. So this is one of those pre-claim things to really look at and understand. And in fact, I've consulted home care agencies and families even to ask about this. If you have to have an aide in the house 7 days a week to get each of those days to count for your elimination period, negotiate for shorter shifts. You're going to keep working with the agency on day 91 because now the insurance money is available and you can increase your hours. But there's some things you can do to try to mitigate the costs. The biggest mistake is assuming 90 days is 3 months. And in a few cases, it works like that. But more commonly, you've got to get paid services along the way. And you got to know that up front or you get frustrated.
You get really frustrated is if you're taking time away from work and away from your family and you are stretched thin. You don't know, you're probably giving up income and promotions and retirement savings. And then it's all for, it doesn't even accomplish what you thought it was accomplishing. So I'm so glad you shared that example of the family you worked on the claim for. So, Bill, we've covered everything from look at the year the policy was issued, look at how the contract defines the care needs and what skills must be lost, physical or cognitive, for the loved one to even be eligible, benefit eligible. We've talked about the care providers and establishing that they are covered, and then this all important elimination period and making sure that it's running so the deductible period is behind you and you can settle into a nice routine. I want to let people know where they can go next because there's so much that we could tell. We could spend an hour on each one of these, I'm sure. But I'll have in the show notes contact information. I'll have your website because now listening to this, maybe the adult children who are caring for mom or dad are thinking they need to look into long term care insurance, but they darn well better understand what they're buying. So I'll have your website and I'll also just offer people can reach out to me and I'll either bring in Bill or bring in somebody else or do it myself as far as guidance on claims, you can always reach me at info, at keystoneelderlaw.com. But Bill, this has been, I think, a very helpful breakdown of the big ideas of long-term care insurance. And I'm really grateful that you shared your expertise today.
Yeah, thanks for the time and the opportunity. My heart wants to help people use this coverage that they paid into. And when it works, it's so valuable for families.
Yes. Thanks again, Bill.
You're welcome.
I hope this episode has been helpful. If you need guidance specifically with a family member living with dementia, I can teach you how to manage communication, decrease stress, and improve quality of life. There is hope in skilled dementia care. Send an email to info@keystoneelderlaw.com. Remember, when you learn the tools to support a family member with dementia, you can do this.